Hey everyone, welcome back to Corporate Decoder, the place where we sift through mountains of corporate paperwork so you don't have to. Today, we're diving into Aspen Aerogels 10K report. And let me tell you, it's a real insulator, a long read, but hey, we are here to decode it. This company is betting big on electric vehicles, and their annual report offers a peek behind the curtain. We'll uncover if they're truly electrifying the market or just spinning their wheels. First things first, Aspen Aerogels filed their annual report. This is basically a yearly checkup where they tell the Securities and Exchange Commission, or SEC, how they did. It's a Form 10K, which is more detailed than the quarterly updates. The key date here is marking the end of their fiscal year. Aspen Aerogels, with a rather bureaucratic file number, is officially based out of. They make these high-tech materials called aerogels, which are used in all kind of stuff. You can find their stock traded on the New York Stock Exchange, and their ticker is ASPN. This means they're subject to all the rules and regulations that come with being a publicly traded company. The report notes their public float, the market value of shares held by non-affiliates, was about $1.7 billion. This number gives you a feeling of what the market thinks of them. Now let's get to the heart of what Aspen Aerogels actually does. They have two main buckets for their business, thermal barrier and energy industrial, and that is how they will break it down for us in the report. On the thermal barrier side, Aspen has developed PyroThin. This is an aerogel used in electric vehicle batteries to prevent what is called thermal runaway. That's when batteries overheat and can catch fire. The company has got deals with some big names like and Toyota to supply these thermal barriers. Last year, they sold nearly $307 million worth of PyroThin alone. On the energy industrial side, they've got products like Pyrogel and Cryogel, which are used as insulation in places like oil refineries and power plants. Aspen has been selling these insulation products for a while, and their sales have steadily grown over the years. This side of the business is more mature compared to the electric vehicle market. To make all these aerogels, Aspen uses its own facility in Rhode Island and has a contract with another manufacturer in China. They are also assembling some of the thermal barriers in Mexico. They were planning a second major plant in Georgia, but have put those plans on hold. Financially, Aspen is growing. Their total revenue jumped to almost $453 million in the year that just ended, compared to about $239 million the year before, and it has consistently increased from 180 M. Aspen operates in the global EV and energy industrial markets, facing competition from traditional insulation companies and other aerogel manufacturers. Some of these competitors are way bigger and have a bigger market share than Aspen does. Aspen believes their strengths lie in their unique aerogel technology and their relationships with big customers. They've got lots of patents and a team of experienced scientists. Looking ahead, Aspen wants to do a few things. Keep expanding in the EV market, increase their production capacity, develop new aerogel products, and grow their share in the energy industrial market. And of course, they're always looking for ways to cut costs and improve their profits. Aspen's core raw materials include alkyl silicate and silane precursors. The price of these materials can go up and down due to supply issues. Aspen is trying to find new suppliers and reformulate their products to avoid this problem. They buy these materials from the United States, Europe, and Asia. When it comes to competing, Aspen believes that superior products' quality and performance, product availability, and prices are critical. Although their products are more expensive than typical materials, they say it has better performance and long-term costs. A big portion of Aspen's thermal barrier sales come from a single customer, General Motors. If GM decides to buy less, it could have a significant adverse effect on our business and operations. Aspen relies on its global sales force, along with distributors and contractors, to sell their products, and also works with companies and OEMs to develop new products for its markets. Contracts with automotive OEMs typically include standard terms such as warranties and the possibility of sharing recall costs. OEMs can also cancel the contracts. 43% of Aspen's total revenue comes from countries outside the US, which means they're exposed to international business risks like currency fluctuations and trade issues. Aspen is in a business that's highly competitive and faces competition from traditional insulation materials based on product performance, price, availability, and proximity to the customer. Like any manufacturing company, Aspen is subject to environmental, health, and safety laws. They don't believe these laws have had a significant adverse effect on their operations so far. Now for the scary part, the risk factors. These are the things that could really hurt Aspen's business. It's a long list, so buckle up. Aspen has previously lost money and they might continue to lose money in the future. They need more funding, but they might not be able to get it. Much of their future operations is hinged on the EV market, and that bet may not play out. They rely on a manufacturer in China, and any problems with that partnership could cause delays or supply issues. Their estimates for the EV market could be wrong. Automotive sales are cyclical, and disruptions in the supply chain could hurt their business. Their operations in China are subject to legal and political risks. Selling products in foreign countries brings risks like currency fluctuations. They rely on a few big customers, and losing one of them could be a big blow. Evolving trends in battery technology could make their products less necessary. If they do not increase production capacity on time, their growth could be slowed. They might face product liability claims or warranty claims. Complying with environmental regulations can be expensive, and any failures there could cause them liabilities. Geopolitical events like the war in Ukraine could negatively impact their business. Intellectual property litigation is and will continue to be costly and time-consuming, and they could become subject to additional such litigation. As a public company, they have to maintain effective internal controls. If their internal controls are weak, people might lose confidence in the company. Shareholders may experience future dilution as a result of future equity offerings. Alright, let's move on to the financials. The report includes the official stamp of approval from KPMG, their accounting firm. This is standard procedure, certifying that the financial statements are legit. And KPMG also gave a thumbs up to their internal controls, which is another good sign. This means that a firm is attesting that the company can account for their money. For the year, Aspen Aerogels had a total revenue of $452.7 million versus the $238.7 million. There's about $89 million in adjusted EBITDA compared to a $23 million loss. If you want more details on the directors, executive officers, and compensation, that information will be in the company's proxy statement, which will be released before their annual meeting. Aspen operates in industries susceptible to volatility from overall economic activity, energy supplies, and raw materials. That's a wrap on the official report. So what's the verdict for Aspen Aerogels? Aspen is making a big push into the EV market, and their revenues are growing quite nicely as the years go on. That is great. It's important to keep in mind that a lot depends on General Motors and a few other big clients, which is risky. The costs of materials and labor have to stay under control, otherwise it could get rough. On the bright side, Aspen has a very experienced team and some serious tech advantages. It'll have to keep fighting off the competition and protecting their patents in the legal system. Overall, Aspen Aerogels looks like a company with a very promising upside in the EV market. They are still not fully profitable and has some notable risks that need to be properly managed. Thanks for watching. If you enjoyed decoding this with me, hit the subscribe and like button. Let me know what companies and SEC filings you want us to decode next time in the comments below.